Hello everyone. Today we will analyze Unilever's financial and ESG performance. Our team, including me, Anne, Queen, Daisuke, and Charles, will examine how effectively Unilever balance profitability with sustainability commitments. First, let me outline our presentation structure. We begin with an introduction of Unilever, followed by four key analyses: financial, environmental, social, and corporate governance. We will conclude with our recommendation to Unilever management. Now I will begin with Unilever financial performance. Unilever is a multinational consumer goods company headquartered in London, United Kingdom. Established in 1929, it has expanded its operation in over 190 countries with a workforce of 128,000 employees. Operating in five business groups like in the picture, beauty and well-being, personal care, home care, nutrition, and ice cream. Unilever serves 3.4 billion consumer daily through a diverse portfolio of over 400 brands, including Dove, Lipton, and Ben& and Jerry. With a strong focus on sustainability and innovation, the company integrates social and environmental responsibility into its business strategy, which help it grow into a global leader in corporate sustainability among the industry. This particular industry faces economic, financial, social, and environmental challenges such as rising input costs, supply chain disruptions, strict regulation, and increasing consumer demand for ethical practice. Unilever also used international frameworks such as Global Reporting Initiative, Integrated Reporting, and the Sustainability Accounting Standard Board to guide its sustainability disclosure. Despite occasional controversy like palm oil sourcing and greenwashing allegation, its ESG performance generally ranked high relative to the industry benchmark. The financial analysis will cover 10 years period from 2015 to 2024. Key ratio and market trends are benchmarked against the personal and household product and service sector, classified by the representative business. The industry, including influential players like L'Oreal, Reckitt, and Bedoff, providing a broader picture on competitive dynamic. First, the accounting performance. Looking at its profitability ratio, Unilever show a steady EBITDA growth from 9,000 million euro to almost 13,000 million in 2024, the highest among its peers, reflecting a strong operation performance despite macroeconomic pressures. However, its operating margin declined slightly from 2019 until 2024, ranked after premium competitor like L'Oreal and Reckitt. This margin compression post-2019 reflects the impacts of rising input costs of palm oil and energy, supply chain disruption, and pricing pressure in the key markets. Overall, Unilever 2024 margin remained well above the industry median, 8.17%, highlighting its continued cost efficiency and pricing strength. About leverage ratio, Unilever debt to equity ratio rose sharply from 2015 to 2018 before easing to 135% in 2024, still well above the industry median of 30.5%. The 2018 surge is due to its acquisition of 3.3 billion euro GSK Horlick brand, expanding its footprint in the health food drink sector across Asia. While leverage has decreased since then, Unilever high debt level compared to the industry median suggest a significant reliance on borrowed capital, increasing financial risk during economic downturn. Next one is liquidity ratio. Its current ratio improved from zero point 0.6 to zero point 0.7 in 2024, indicating progress in liquidity management. However, it remains below industry median 1.2, suggesting weaker short-term financial flexibility compared to its peers. In 2024, the company reported 19,000 million euro in current assets against 25,000 million euro in current liabilities, reinforcing its reliance on working capital rather than maintaining large cash reserve. This approach may enhance operation efficiency but also expose the company to potential liquidity risk. Unilever operating strategy emphasizes strong cash inflow through efficient working capital management. It has shortened receivable days from 44 days to 34 days in 2024, well below industry median 66 days, reducing the credit risk and accelerating cash inflow. Also, it extends payable to 113 days, leverage supplier credit beyond the industry median 109 days. Inventory days also remain steady between 52 and 56 days, far lower than the industry 103 days, indicating strong demand and efficient supply chain management, reduce the risk of excess inventory and obsolescence. Overall, its accounting performance reflects strong operation capabilities and consistent earning growth. However, issues regarding social and environmental, such as deforestation linked to palm oil sourcing and accusation of greenwashing in 2019, have led to its reputational damage, increased compliance costs, potential disruption in supply chain, factors that may have impacted the company profit in future. About stock market performance, Unilever remained a top global consumer goods company by market cap, second only to L'Oreal. Although its market cap dropped sharply in 2018 due to a failed plan to relocate its headquarters to Netherlands, its market cap rebounded quickly to 136 billion euro in 2024, well above the industry median of 98 billion. Its enterprise value also climbed up to 162 billion, regaining strong investor confidence. Unilever's share buyback program cut its outstanding share by 13% in 10 years, boosting its earning per share and supporting long-term shareholder value. Its share price also rose 38% over the decade, with a 12% rebound quickly in just 1 year, 2024, after the pandemic-related decrease. Its consistent dividend yield, 3.6% during the pandemic downturns, reflecting its reputation as a defensive blue-chip stock. Although ESG controversy caused short-term volatility, Unilever fundamental and dividend kept long-term investor engaged. It's ranked highly in ESG index like LSEG, DJSI, MSCI. Although controversy like greenwashing have affected performance occasionally, still its strong liquidity, 3 million shares traded daily, and steady return make it attractive to long-term investors. Analyst sentiment in 2024 is moderately positive, 45% buy, 50% hold, and 5% sell. Unilever also benefit from strong analyst coverage, with ESG factor increasingly influence valuation and investment decision. Morgan Stanley report viewed Unilever sustainability initiative as the margin risk, but also acknowledged its premium valuation due to its ESG leadership, while others like Bernstein debate its ESG investment short-term impact on its returns, but is critical for the long-term brand equity. Moving on, Queen, my teammate, will discuss about Unilever environmental performance.
And now I will talk about environmental analysis. The first one is environmental responsibility at Unilever. Unilever committed to reducing environmental impacts and addressing climate change, and they have a four key sustainability priorities: climate, nature, plastic, and livelihoods. And its reason is environmentally responsible development is essential for sustainable profits, while the mission is grow business while decoupling growth from environmental impact is the key action under its environmental policy include integrating environmental concern into risk mitigation procedure, regularly update material assessment to reflect current and emerging issues, and ensuring compliance with law and internal standards. And the next one is the set continuous improvement targets and implement sustainability and safety initiatives. Now turn to Unilever and its action part. The first one is the climate action. Unilever 2020 Climate Transition Action Plan targets net zero emission by 2039 and zero operational emission by 2030. And by 2023, the scope 1 and 2 emission was down 74% from 2015, and the total emission under the net zero plan fell 1% from 2022, and scope 1, 2, 3 emission per customer use declined by 3% from 2022 and 21% from 2010. And the four key emission resource, the first one is the raw material. It accounts for 52%. The packaging material is account for 11%. And the two last one is indirect procurement and logistics, account for 16% and 3% respectively. One is about nature action. Unilever depends on nature, including land, forest, and water system, and it's recognized biodiversity loss as an emerging risk. So protecting this system is important to ensure the resilience of the business and the community where they operate. And in 2023, they step up their efforts to deliver a deforestation-free supply chain and continue to make investment to protect and generate nature. And they have three key actions in 2023: recording the nature. The first one is the deforestation-free supply chain, and protecting and regenerating nature. And the last one is the protecting water. And now turn to plastic action. Tackling plastic waste and pollution is a critical priority for Unilever, and they continue as the progress and renew focus and investment in packaging R&D center with collaboration of scientists, packaging experts, and digital modeler. And they have a four key action. The first one is reducing virgin plastic, designing for recycling and reuse, collecting and processing plastic, and advocacy for global solution. And next one is about potential conflicts between Unilever and environment. The first conflict is plastic packaging versus environmental harm. So a tension between affordability, packaging, and environmental responsibility. And the next one is the palm oil sourcing and deforestation. The conflict between the cost-effective ingredient and ecological damage. And the next one is business growth in developing markets and infrastructure limitation. This highlights a trade-off between market expansion and the environmental sustainability. And about environmental pillar performance, they got the lowest score among three ESG factors, and the score dropped from 88 in 2022 to 77 in 2023. And this decrease suggests a reduction in the effectiveness of commitment towards the environmental sustainability initiative over the past year. And the factor like carbon emission and energy consumption contribution to this decrease is a comparison path between the Unilever environmental performance versus competitors. It's recognized as a sustainability frontrunner. Unilever supports global initiatives and leads with strategy like Unilever Compass. Despite its efforts, Unilever scores 77 on environmental pillars, trailing behind Danone, Nestle, and Reckitt, and it's outperformed peers like Henkel, but it still has the room to improve on executing environmental commitment.
Hi everyone, I'm Daisuke, and I'll walk you through the social part of analysis. First, let's look at the DEI inequality. In 2023, Unilever outpaced the 33.5% global average with 42% women managers, 37% female staff, and 25% board seats. In a 5% UK pay gap favoring women, it enforces balanced slates, tracks the gender employment ratio, and benchmarks on Bloomberg's Gender Equality Index. However, challenges persist. In 2024, Unilever abandoned its 5% disability hiring pledge and €2 billion diverse supplier spend, which drawing criticism and undercutting its DEI gains. Next, let's move to the human capital development. In 2023, Unilever launched Shape Your Own Adventure, top FMCG employee rankings in half its key markets. Yet only 24% of staff had gained future-ready skills by year end against its 100% by 2025 target. On the positive side, research suggests Unilever's mental health first aid, well-being counseling, and flexible work arrangements have strengthened engagement and resilience, showing how its sustainability strategy also boosts employee well-being and productivity. Next, let's shift to modern slavery and human rights. Unilever issues annual modern slavery statements and a human rights report, joined the CGF's People Positive Plum project, and publicly discloses its palm oil suppliers. Yet, its vast supply chain still faces modern slavery risk and execution gaps persist. Amnesty 2016 and a 2022 study exposed child, forced labor, and 70 rights abuses among Unilever's palm oil and tea suppliers, while 2024 social pledges rollbacks amplify calls for tougher due diligence. Next, I'll be covering product safety and quality. Unilever rigorously tests product safety worldwide. After recalling 19 types of dry shampoos for carcinogen traces in 2022 and overhauling processes, it logged zero major safety incidents in 2023. The company also holds high nutrition standards. By 2023, 85% of Unilever's foods hit science-based nutrition standards, and 95% of its ice cream met calorie and sugar targets, which underscores its health focus and the need for continued safety and sustainability vetting of new products. Next, let's discuss about the potential conflicts with society. Despite having a well-maintained social policies, Unilever is still facing a couple of practical challenges. As Reuters uncovered, forced labor risk in Unilever's plant oil supply, 2024 rollbacks of social pledges also angered activists, and a not done yet trademark dispute drew criticism highlighting tensions between its social goals and business pressures. Despite robust social policies, complex global supply chains and digital era shifts can strain Unilever's commitments, facing demands from employees, union, human rights groups, and consumers. The company must reconcile rapid growth with ethical, sustainable operations. Last, let's look at the LSIC social pillar analysis. Unilever's ESG score dropped as workforce gain was eclipsed by setbacks in emission, resources use, and management. Unilever leads UK personal and household products services peers in overall ESG thanks to its top social pillar score, though competitive pressure persists. Social pillar earns an A and makes up nearly half its ESG score, showing workforce and community impact are critical to its ESG rating. Lastly, we can observe a slightly decline from 2019, which likely due to controversies and tougher criteria. That's all for my parts. Thank you.
Thank you, Daisy, for covering the environmental analysis. Hi, everyone. My name is Charles Watopo, and I will be the presenter for corporate governance analysis of Unilever. The company is mostly owned by institutional shareholders. As you can see on the table, there are 920 institutional shareholders, while 30 of them are strategic entities. Moreover, 919 of them are investment managers, while only 28 are individual investment. Interesting. We'll discuss the top 20 shareholders of Unilever. As you can see on the slide, the top 20 shareholders are listed according to the ranks. So the first on the rank is BlackRock Investment. They hold 9.07% of shares and the largest shareholders of the company. Among the top 10, we also have one individual by the name of Nelson Pets. He is also the shareholder of the company and holds 1.31% of shares. Let's see if the company has any signatory to the UNPRI signatory. Unilever has signatory to the UNPRI. Among the top 20 investors, only one, Legal and General Investment Management, is among the signatory to the UNPRI. Well, the company CFO in 2022, Graham Pitkitchley, had been signatory before exited in 2022. So it is certain that any direct pressure from shareholders regarding sustainability can be limited since LGIM had a good track record. According to our research, we have two conflicts of interest. The first one is on sustainability versus economic benefits. And among the top 10 investors, Jerry Smith, the owner of Fund Smith Equity Fund, who holds 1.3 billion stake, criticized publicly Unilever because they are putting more priority on sustainability or financial performance. Well, despite of this, the sustainability living brand performance increased in the market by 69%. Another important issue is the CEO remuneration. While investors revolt over fat cut pay in the Unilever boardroom, this resulted in 58% of shareholders who voted against the exit salary pay in 2022. Unilever Executive Management Team 2023 is led by Mr. Ian Chumacha. He's the current CEO. CEO remuneration is structured and paid in three components: fixed pay, annual incentives, and long-term incentives, and linked to sustainability goals. Well, interesting to note that, for instance, 80% of remuneration is linked to financial metrics, such as EPS growth, sales, and free cash flows, and only 20% is linked to ESG sustainability goals, which aim at reducing greenhouse gas emissions, scope 1 and 2, and on focus on diversity and inclusion and deforestation from supply chain. Well, according to financial year 2023, the board has 12 members, including two executive directors. The board chair is Mr. Ian Meekins, and he was also the independent director of the company. Looking deeper into the board of directors, 58% of directors are male, while 42% of them are female. On cultural diversity, as you can see on the slide, 67% of the overall board of directors are diverse, and this needs to be improved. Well, the board meeting attendance is decreasing over the years. As you can see, in 2023, we only have 6 meetings. The slides pinpoints board directors' overall remuneration and also includes various committees' remuneration package. As you can see on the slide, chairman has the highest remuneration, which is around €756,000, and this excludes other benefits. We have the board committee 2023, and we have four main committees here: the nominating and governance committee, where they have 4 members, and the audit committees, they have 3 members, and the compensation committee, they have 5 members. And lastly, we have a new interesting committee. It's called the Corporate Responsibility Committee. The committee was established in 2018 and is one of the driving forces behind the sustainability goals of Unilever. The committee in 2023 only had 2 members, but in 2025, the committee increased its membership to 5 members, and they have met 5 times annually. They reported quarterly to Unilever for its performance and proactive stance on CSR towards Action Plan 2023. So the governance bill of Unilever has recorded a remarkable rating of 91%, supports social and environmental performance. While analyzing the CSR strategy, it has achieved 94%, management has 93%, while sellers score is decreased to 81%. Comparing this, as you can see on the slide, Colgate Palmolive ranked top in seller score and also CSR strategy than Unilever. And this demonstrates a stronger investment alignment and clearer strategic communication. And Unilever could learn from Colgate's practice of engaging shareholders through more transparent voting outcomes and timely measures. Unilever primarily raised debt through bond issuance rather than traditional banking loan. And as you can see on the slide, you will see that there are two active capital markets. The first one includes Eurobond 10 note program that's value of $25 billion, and the second one is a US shelf that value of $25 billion. And they're issued by Unilever's PLC, Capital Corporation, and Unilever Financial Netherlands. So Unilever owns a strong credit rating. As you can see on the table, you will see that Standard & Poor's gives a plus rating for the long term, and also for the Moody's rating, it also gives an 1A. And for the outlook, they both give a stable outlook for this. However, Fitch rating warned of potential downside risk in 2022 due to strategic impacting profitability. Let's look at the ESG rating in terms of peer reviews. So Unilever sustainability risk rating places 11th in the household products sector below its closest peer. Sustainability finance, Unilever issued €250 million green sustainability bond in 2014. And this is the first of consumer goods firm to tap the green bond market and to adopt sustainability-linked loan traction. Well, despite of this good news, Unilever lags behind its peers in formal sustainability financing, even as its ESG governance remains strong. And one reason is to do with the management, especially the CEO, because he's more focused on profitability without making any expansion on the ESG goals. And I'll let my colleagues do the summary.
In conclusion, Unilever stands out as a financially resilient multinational with a strong global brand portfolio and defensive market position. However, challenges remain, particularly its high debt level and reliance on short-term liquidity may create risk in uncertain market. Unilever has long been recognized for its sustainability leadership, among the first to adopt green bonds and sustainability-linked loans. However, under former CEO Hind, recent strategic shifts have prioritized short-term profitability, leading to scale-back ESG target and weaker governance performance compared to its peers. The CEO resignation in early 2025 may mark a turning point, potentially a return to more balanced and sustainable growth. For socially responsible investor, the company remains a moderately attractive investment, but with caution. Under the Code of Ethics and Standard Professional Conduct, we disclose key issues to clients, such as the conflict of interest, single-use plastic and palm oil sourcing, allegation of deforestation and forced labor in developing market may conflict with its sustainability claim. ESG risk, uh, from medium to high risk due to the greenwashing scrutiny, uh, lower ESG target, and the misalignment between executive incentive and sustainability goals. To restore the leadership and stakeholder trust, the company should consider the following key action. Financially, uh, it can refinance debt through green loans, issue sustainability-linked bond, and invest in AI to improve supply chain efficiency and fund the saving to ESG innovation. Environmentally, replace single-use plastic with biodegradable system, ensure 100% deforestation-free palm oil using satellite monitoring, and reduce Scope 3 emission through supplier partnership and blockchain traceability. Socially, we stay diversity and disability target tied to the executive pay and audit high-risk supplier to eliminate labor exploitation. uh, Corporate governance, it can raise ESG-linked incentive to at least 40% of executive remuneration instead of 20 like currently, and strengthen board expertise in environmental and human rights issue. For transparency, the company can provide quarterly third-party verified ESG report and collaborate with the NGO on waste solution in high-risk regions. By aligning its financial and ESG strategy, Unilever can rebuild its position as a sustainability pioneer in delivering long-term value to shareholders. Thank you.